shit going on with the boats.
Any more questions?
Hello.
Hello.
Yeah. I was talking about bowling.
One.
I think Garson May was today, and I was looking at the chart.
Hello, guys. Welcome.
How the thing, the body side.
Yeah.
But it's something the mobile app.
How are you guys? How's everyone going?
Good. How are you?
Doing pretty good. Thank you. Doing pretty good. Nice day today. Little chop in the morning and then nice trend. And I think the class of today, the lecture is going to be very appropriate for price actions like today. Hello, Rena. Gail, how are you? Let's see, what else do we have here? Let's see how the microphones are. Remember, guys, that we have microphones are open, so bear in mind that your microphones are open.
This.
That's from Cuba or something.
Travis, what did you trade today? Yeah, you don't need to have your cam on. Adrian, you have your camera on. Omar's, you don't need to have the camera on your side, so you're good. SPX, nice. Do you grab SPX from morning trade all the way to the end of the day, Travis, or just the end of the day push? All right, guys. Thank you. I'm just gonna wait a couple of minutes for everyone to join. 8:01. We can start 8:03. Nice. How was everyone's trading? How's everyone doing today? Google call. Nice. Let's see. Viral was taking me out of PayPal. You're always on point. PayPal, nice chart. Look great for tomorrow. Google. Look, Google's looking great. Yeah, nice trade, guys. Beautiful move. I like it. Google L a little better, but same thing. So the idea today, guys, it's to talk a little more in depth about Bolinger bands. Just an indicator that I'm using currently, and I really like it. And I think that you might find it a lot easier to use than other indicators, but it has some tricks and how to use it, how to read it, and how to combine it with our levels and other indicators that I think it might be nice to talk about it and learn a little more. And like this, we can have sort of a series to talk about each indicator, and then you can find which indicator will be the best one for you and which one you feel more identify with your type of trading and your style of trading. So I think we're gonna start right now. I think Amazon puts Rena. Wow, beautiful. Even though everything was coming up, you went against the trend, and let me see what Amazon did. Yeah, Amazon at open did a great, nice flush, and then beautiful bounce back up, like most of the names. We'll go into detail in all of these names, and we'll find to see how different from what you did with your normal indicators you could have been. Yeah, I mean, the push was, it wasn't that good. I mean, the push was great on the pre-market on Thursday, but I'll try to see if you can see something different by using the Bollinger Bands.
Well, Bollinger Bands with the 20 and the 50 and the 200?
Yeah, man. Yep, of course.
Yeah, baby.
Roberto, what I think of Apple, I trade Apple, I buy Apple every time I have excess money, and I think Apple has been on a tank mode so far. If you see the, we will see the chart, like Amazon went from 152 to 177. We have Apple coming all the way from 196 and a little bit lower, all the way up to 226. Apple filled the gap, did everything. So we'll watch this on different time frames, and we'll see how the entries using the Bollinger Bands could have, been different. But I think Apple, it's in a huge resistance right now at 226.82, and we'll see why. And then if we break up, what will be our next levels? But let's talk a little bit about BBAN and how BBAN can help us trade, and how it works and what it is really. So let's have some fun here. So as everyone knows, it's just a technical indicator. Bollinger Bands is just a different technical indicator that it has certain peculiarity, that it's made about 3 bands. It's everyone uses it just to provide insight trends, volatility, and potential reversals. This is what I like. This peculiar set of characteristics. It's what I like about Bollinger. It helps you know where the trend goes. It helps you with the volatility and potential reversals on the upside, on the downside. When you have EMAs, you might know that if you are below or above the 20 or the 50, that you may be going down or up, but you don't have boundaries. You don't have sort of a how far down or oversold, or how far overbought should I be to plan a re-entry or a reversal. So Bollinger Bands give you that peculiarity. They are widely used technical indicator. Most of you probably, anyone have never heard about Bollinger Bands here? No, right? We are 30 people, 28 participants right now. Anyone has never heard about Bollinger Bands? Has anyone never used it before? No one? There's the best for scalp trades, yeah, and they are really nice. 20, 15, 200. I agree. No, they're created by a mathematician called John Bolinger. He provided a dynamic support for resistance and levels. I'm not gonna go for the whole story about John Bolinger, but he was a great trader and a mathematician that he created something very simple. And we'll go into detail, like how do we try to find about the 95% of all of the move that we're expecting. It can be set between 2 standard deviations. So when we go into how the Bollinger Bands are made and how the standard deviation works, we will see why this is a great indicator. They're very nice for volatility and potential entry and exit points. So this is fairly easy. John Bolinger, financial analyst, technical analyst, he made this at the 1980s, and as of today, still one of the best indicators that we have. But we have to keep in mind that they are not to be used by itself. It needs to be mixed with the price action on your levels and some other indicators that are going to help you know which direction might the trend rank up or down. It was created because there was a need for volatility sort of measurement, and that volatility, since it's dynamic, all the other levels that they were used at the time were fixed. So Bollinger Bands was one of the first ones that it moves with the price action, and that makes Bollinger Bands very useful. Yeah, they have become a staple in a technical analysis because they're very adaptable. The purpose is to provide a definition of where the prices might go. Remember, every indicator that we use, it's a lagging indicator. So we have to take the risk of, I believe that my perception of all my indicators and my price action is telling me that it's going to go up or down. But the indicators are not going to tell you, here's where you need to get out and here's where you need to get out. No, you need to have a little, rationale behind it and mix and the different indicators that we know. And out of that, we will know that if we should get into that trade or not. And unlike the fixed with bands, the Bollinger Bands adjust based on the market volatility, make them more responsive to market conditions. And we'll go into detail on when we see how the Bollinger Bands are made and what's the difference between the middle band, the upper band, and the lower band. Filling a gap in technical analysis, that's why the Bollingers were created. Before Bollinger Bands, traders relied on statistic bands that didn't account for the volatility change. That's why, volatility, you will hear every time that we talk about volatility, Bollinger Bands are great. And which other indicator sometimes we use for volatility, guys? Anyone uses any other indicator that we use often in VC that you hear a lot about it? TTM squeeze, RSI, there you go, yeah. Those are other ones that we use for volatility. Ghost bands, Gale, perfect. Ghost bands are not as common as the TTM squeeze or the RSI, but yes, those are
VWAP.
VWAP, even though it adapts to the VWAP, it's more about the volume and the message. And and I will tell you how the what the difference on the VWAP within the middle of the band.
means Punam Kirat.
So before the Bollinger Bands was the need of these keys. So how they are composed, how the Bollinger Bands are composed. So we have a middle band. A middle band is just a middle line that it's in the middle of two upper bands and lower band. The middle band normally is the 20 SMA. Simple. 20 SMA, it's going to be the middle band, and then we have 2 standard deviations up and 2 standard deviations down. That's the standard form of the Bolinger bands. And as of mathematics, if you are within a middle point and you are 2 standard deviations on the upside, and then 2 standard deviations to the downside, that will cover 95% of probability that you are in the right price action. So that's very important to know. Why we use 2 standard deviations? Because statistically, that will cover 95% of probability that the price action is going to fall within that range. So that's a lot. I mean, 95% of probability, that's huge. So that's why one of the reasons why it's really nice. Yes,
I have a question. So, for example, like if you're gonna use that indicator and get familiar with it, how would you take it as a like a beginner scalp trader or day trader? because I kind of use it as a like if my top band, if my trend is on top of my top band, I write calls, and if it's under my down band, then I take puts. But obviously, in choppy days, it's very tricky, so you just kind of have to detect trend wise.
Can you repeat me? How do you grab your calls and puts using the Bollinger Bands?
Pretty much if the pretty much the line or the candles are above my
Upper
top
Bollinger
Bollinger Band,
Band?
yeah, I
You
take
grab.
calls.
Okay.
And if it keeps on riding up, I don't really get worried about selling it. That's how I use it, or vice versa to the bottom band as well.
All right. If you hold 1 second, I will go into a slide that I'm gonna show you a different way of using it. Because are you using the middle line for anything? Are you using the middle band for anything?
I kind of don't use the middle band, but I should. But that's how I
Yep.
kind of use it. And then I use the VWAP and pretty much TTM squeeze. That's what I use.
Okay. I think you have a great question, and that's normally that's not how the Bollinger Band is created to trade, and I'll show you how. Why? Okay. I don't have your name. It only says iPhone, so sorry if I don't know your name, but it just said iPhone here. So I'll let you know in a second. So the purpose of each of these components is, and this is where it's gonna kind of start answering your question, is the purpose of the middle band is to represent what's the average price is in the last 20 periods. So that's why my middle lane, it's very important to know. So how do we use the upper and lower band? It's just to define the range of volatility. So you're using the Bollinger Band on a different way that it's not made exactly to be used like that, because and I show you why, when you are oversold or overbought, it's a confirmation of the trend direction, but that's not the best use of how to use that Bollinger Band, and I'll show you. This is how we calculate the Bollinger Band, and I'm not going to go here into too much detail because all our systems, our brokerage just do it by itself. But if you wanted to know how it's calculated, it's we have the step one, which like we have the 20 period simple and moving average, and then we use the SMA plus 2 times the standard deviation that we're using. So that's why it's a plus and minus 2 the standard deviation, and for anyone, if anyone doesn't know, a standard deviation is just a measure of volatility, and it represents the price, how the price deviates from an average. And the standard deviation works as a line in the middle. It's a lane that you just go in the middle. And if you go to one side or the other one, the standard deviation is going to be like the center, the zero. So if you're calculating a price from one side or the other one, depends if you go to the right side, the standard deviation is going to be positive. The standard deviation is going to be negative if it goes to the other side, but we start in zero. And my settings, I use I'll show you because I have the charts that I have here on the picture are the same that I use normally. So it's mine. And then here, it's for the person who asked the question, the dynamic nature of the B bands, it's when they're are widened or narrow depending on the market volatility. And here's where you might be using not the full potential of the Bollinger Bands, because I'm not going to say they're using it wrong, but you're using the potential from where you should be getting the calls or puts or your whole move. So this is how I use them, and this is my chart from Nike today. So to go first, fairly simple. This is the upper band. That's normally what that we call these candles here that are overbought. If this is the lower band, this is normally standard. But I put it like my green one is on top, my red one is on below. Lower band, it's oversold. And then we have here, here, instead of having the 20 daily SMA, I use the VWAP. But that's my use. I use it as a personal preference, just because the 20 daily SMAs, it's a fixed on the price movement, but my VWAP also moves with the volume of the price movement. So I like the VWAP better than the SMA, but it doesn't mean that the standard setup of the B band, it's not, it's perfect. The only thing that normally we use is when we are on top of the B band, we are in a positive trend, and when we are below, it's a negative trend. So, and that includes volume. So this is what happened with the member that asked. You see, if you grab calls right here, you kind of lost the move. I mean, you are okay that you grab the calls outside the B band, but the real use of the B band is here. Normally, when we see that the B bands are narrowing, this is going to be the same use as we have on the TTM squeeze. This will be like our red dots. This is on a squeeze. That's what it's called. That's why it's narrow. Why it's on a squeeze? You have a low volatility, and that's why the price range is a lot slower. And then we have the opening. So when we have the bands, moving apart from each other, that's when we call the move on the volatility. And then here's where the volatility start expanding. So when the volatility start expanding, you see where you should get your calls and your puts. Well, normally when you are oversold and your price action is away from your lower band, here's your entry normally for calls. So normally here you will entry, and then you will get out either at the top of your band, or if you're outside, of course, outside. And that's why I have those little arrows. So this is a better example here. You see, the trade today on Nike was an entry at this overbought section, because we broke. Remember, this is between here and here's where 95% of the price action it's going to land. So if I'm here, I'm away from my standard deviation. So I'm away from the average price action that we had. And if I'm above this band here, and normally will be the 20 daily SMA, I'm very, very, very overbought above the 20 daily SMA. So if I grab puts here, I would have grabbed my whole move all the way until normally it's when we touch back again the lower B band. So here is where normally there will be the perfect, exit. But then if we find that the price action is not really moving too far away from the band and it's just going along the band, that means that we are experiencing a lot of volume on a reversal of a downtrend, and we can kind of, I call it that we're surfing the band all the way down until there's a rejection. But normally you will grab your puts when you are overbought, not calls, and you try to see if the price action goes again into between the B bands, and then when you touch the lower band, that's when you exit, or if you leave a runner, this will be another exit. So the B bands are going to be margins. If we touch like here again, this will be your entry for calls. So in this kind of jar, then when we have that reversal and you get in between the bands again, you should have just hold these calls, hold it until we are again at the top. So that's how they are made. Like that's why they will be the correct use. So what you're doing right now by grabbing calls outside here or here is you're securing that you are in a very strong, trend, either up or down, but you're losing all this move from here. And I will go into another ways of trading, because there are different ways. Like there's this one way of trading, and there's another way of trading, another style that will be just from your middle band until your upper band. So there's some scalpers that they love just, grab on and that's why I use the B band, the VWAP. I like, if you go from the up push from VWAP to the upper band, that's a scalp. And if I go from the oversold part to my VWAP, that's another scalp. I don't need to do the whole move all the way down here. Of course, it's great if I can do it and if you can participate. But if I go it from here to here, that's a great, this is a 10-minute scalp that I did on 2 huge candles reversal. So when the candles exit the lower red band, it's an entrance for calls. Correct, Roberto. When you are, I don't know if the original ones are red or green, because I think I changed it because I like the visual to green. It's, you know, we're on top, and red we're below, or you can do it backwards, green and red. But normally when you are below the band, doesn't matter the color, it will be your, I mean, you have to be aware. And here's where it gets tricky, and I'll go later on the example going into real like today's examples. You have to look this, but then you have to help yourself with the RSI or TTM squeeze or the MACD to see that we're switching the price action, and we're switching to go up or down. So it's really important that, you know, this is not the only thing. You go blind here and I'm grabbing calls, full porting calls. No, you have to be very careful, and we'll go into my charts in TOS and we'll see this in more detail. So
Thanks, man. I was using it the wrong way. I really appreciate you explaining it like that.
Yes, this is the correct way of using the B band. So you were losing the whole between the bands sort of aspect of the usage. So when you were grabbing call like puts here, part of the whole move already happened. So you're just grabbing like the tip or the tail of the move. So it's really important, and I'll show you on TOS real examples, and you see how very accurate the moves happen. And I just noticed that I should change that red to green. The green one should be on below, and the red one should be on top. Yeah, and we'll do that together. So how to use the Bollinger Bands in trading? Here's where I explain, like, you know, the bands reflect volatility. When the bands are expanding, indicate an increase in volatility. So what happened here? Why do we have an increase in volatility? Well, the price action here is not very volatile, right? It's a tight range. But when I go from here to here, now we have an expansion. And when I go from here to here, that's a huge expansion now. So look at it. If I will draw a line from here to here, look at the difference on the range that we have on the price. So that's why we call it an expansion. And that's why when you see this type of move, something is coming. When you see that it's squeezing and very tight, it's going to be a move somewhere. Do we know where? No, we don't know it's going to be up or down. We just know that it's coming. And you will see the same happen with the TTM squeeze, and you will see the same happen. The one that I think that helps the most should be the MACD, and we'll go through that. So let's move on a little bit. So the practical application is that traders use this information to gauge the market conditions, so we know it is very volatile or not. And then the wider the bands might signal how the potential to trend the continuation. When we narrow the bands, indicates a possible breakout. Meaning why? Well, we're on that squeeze, and then that squeeze is going to open up or down. We have no clue where it's going to go. So strategies. Here's where I was calling about, you know, there's the bounce and there's the squeeze. The bounce, you go from, the prices tend to return to the middle band most of the time. So the middle band will be the mean. So you are in the middle of the two bands. You have one deviation that it's +2, and the other deviation it's -2. The mean or the middle band, it's where normally the price action always goes back to. How do we apply this? Well, we look for reversals when the price action touches either the upper band or the lower band. So again, we don't try to look for play above or below the bands. We try to play inside the bands. So when we are a little bit away from the band, lower, we try to grab calls. And when we are on the upper side, oversold, overbought, we try to grab puts. So it's a little bit inverse of what you were doing, but you will see how that works. And then if the price touches the upper band, yeah, the sell position. And then the Bollinger squeeze is a squeeze that occurs when the bands come close together. That's what I was explaining on the previous chart, indicating that low volatility, it's becoming a potential breakout. So Why do we use it? How do we use this? Well, what do we trade? Basically, we trade breakouts all the time. We trade trends that are trying to break up or down. Here, we just use the bands to trade in within those breakouts. So same thing, but it's just visually a little bit different. So some people still like to just draw their trend lines. Some people like to use these, I use both. I do my trend lines, but inside my Bollinger Bands, and I'll go through examples in Apple, for example, today and other days. This is a visual representation again. This is today on ASTS. This is a, I don't know, most of you, we were talking about on the VC. This is a company that makes satellites, but they don't send them to space. It's been on a squeeze. It's been going up all the time. But look at how this representation of a squeeze. Look at this squeeze. Look at a tight price action, and then all of a sudden, we have our expansion on the B bands. So what this is telling you that, there is a big move coming in, and then all of a sudden the squeeze opens. And then here you can see that I have the MACD. The MACD, what happened with the MACD? Well, the blue line, normally it's a line that it's telling us which direction the either the histogram is going to go up or down. And when you see this, and I'll go this live when we can see the crosshair watching, the exact levels, you see when the blue line starts breaking up here, it's when we start breaking on the upside all the way here. And then all of a sudden, when we reach the top, and this was yesterday's move, or it was Friday moves, it was huge. We have the MACD squeezing down because this is gone, volume coming down, and then we start this little kind of trend line again, and here's where we go above. So for those of you that doesn't know how to use the MACD has a mix of histograms like the TTM squeeze. The light green means that we're starting to move up. Darker green, we're starting to move down, so we plateau here, and we're coming down, and then same. Light red, we're starting to increase the movement down, and then darker red, it's the volume, it's sort of fading away, and we are going again to the middle. We're losing the volume, basically. And then the blue line, every time that it crosses the signal line, that's how the yellow line it's called. When we cross above, that's a trend up, and then we cross down, we go down. Easy. So every time you see a cross, normally the price action starts going up. So you see how great this example is of a squeeze. This is, I thought this was really nice, and we'll see other ones today. So how do we normally, as I was discussing before, you need to combine the Bollinger Band with other indicators. You cannot grab it by itself and say, well, every time that I'm down, I'm just grabbing calls. Every time we're up, I'm full porting puts. No, you need to help yourself with either the RSI, either the MACD, or you can use the TTN squeeze, whatever you like to use better. Remember, normally we like to use the more indicators that are going in our favor, the more certain we are about, okay, I'm grabbing this trade on the correct direction. So we have your price action, your Bollinger Band is telling you that we are going up, and then my TTM squeeze is telling me that we're going up. Okay, this is great. I have enough confirmation to risk myself and say, well, I assume, given this educated guess, that we're going up. Do we know that what's going to happen for sure? No, we don't know. Remember, all these indicators are lagger. They're late. They're based on past information. So we're assuming, and that's where this magic of being a trader comes in. We don't know what's going to happen. Never. We're trying to assume all the time. Sometimes we assume correctly, and sometimes we're wrong. The idea is to be correct more times than we're wrong. Ultimate oscillator with divergence. Yeah, the ultimate oscillator with Adrian. We can use that too. There are different ways that we can use depending on which are your preferred indicator. So I'm not gonna go into this. So the pros and cons of using the Bollinger Bands. Here's where you can decide if you want to use this or not. You have The adaptability. Yeah, if someone has a question? No? Yes? Okay, so adaptability. The Bollinger Bands adjust to different market conditions because they are very versatile. We have the simplicity. They are very easy to understand because the chart is by itself, up and down. The versatility can be used across different time frames and asset classes. You can use, I use Bollinger Bands on Bitcoin, for example. I can use it on the dollar. I can use it on futures. You can just, they're very, very versatile. So do we have any limitations? They're not a standalone tool, and you will see this on everything that you read about Bollinger Bands. You need to have other indicators to avoid having a false signal. Why? Because sometimes you can see that it might be touching, and then it becomes a continuation of that trend. So you need to be aware where the price action is going, and we need to be aware of other indicators that are going to help you decide which direction the trend is going. It gives you false signals because in trending markets, price may walk along the band. That's what I'm saying, that I surfed along the band. This leads to potential false reversal signals, because we might think that when it goes away outside the Bollinger Band, oh, this is a reversal, I'm going to grab puts if we're going up. And then all of a sudden, this is just a big, trend reversal, and we're changing and just keep on going up outside the Bollinger Band. And, well, it wasn't a fake out, it's just a stronger than the average 95% move, and it can keep going outside of the Bollinger Band. So we got to be careful with that. And then understanding the broader market context is crucial, because you should not use this as there's no one indicator that it should be used by itself. Common mistakes to avoid. Well, many traders assume that touching the upper band means sell and that the lower band means buy. We just talk about that. It's not exactly just like that. We have to make sure that what's happening on the price action on the day and the trend that we're choosing, it's according with the market, not just with one thing. The reality, bands are not absolute say buy and sell signals, but indicators of volatility. Context and additional indicators are always necessary. Over-reliance on Bollinger Bands? No. Why? Well, if we over-relied on the Bollinger Bands without a confirming signal from other indicators, we may lose, and we don't want to lose, so we got to be very careful. And the solution is to use a conjunction with a other technical tool like the RSI, MACD, or volume. That's up to you which one you like to use better. And conclusion, Bollinger Bands are super powerful and a very adaptable tool to understand the market volatility. Remember, they consist on a middle, simple moving average, which is normally and standard to 20, and we have an upper and we have a lower band that normally it's the 2 and +2 and -2 standard deviation. It can help you to identify the trend, either a reversal, a breakout, and understanding and applying the Bollinger Band can significantly enhance your strategy, and especially if it's combined with other indicators. So why the Bollinger Bands are essential? Well, they provide a flexible way to analyze markets, and it will give you a better decision by identifying if we are oversold or overbought. And here's where I'm going to break and jump to our charts. That's where everyone loves to, we can make better views of what's happening and how it's happening. Any questions so far here, guys? Any questions about the definitions? Nothing? Let's jump into the charts. So now we're going to go to this. Perfect. So let's see what else.
Yo, I have two charts. If you could look at them when you have a chance. It's AVGO and IGV.
Let's go right away. Here we go. So this is what the 1 hour. This is what we see in the 1 hour. Let me, I'm just grabbing the chat to see, can you look ARM? Of course, we'll look any of the names that you like, guys, and we will see if you were red on a trade today. Let's watch out if our Bollinger Band told us a different story. So if you see here, I have the MACD and I have the 1 hour right now set. So you see that we have a sort of an expansion. It's been going up. It hasn't touched the lower B1 just until here. So this is a little squeeze happening right now on Broadcom, and it's been trending up, and not touching. So you see, if you would have bought here calls this day or around this area, because the market was closed, you could have just been on your calls without having any really scare of getting out until here. Sorry if you see my puppy. It's outside my room trying to get inside. Let's see. What do you want? She's used to trade. When I trade, she just sits below my desk with me. So you're saying, hi, I'm in a class. Yeah, leave them alone. Shut up. So sorry about that. So this is one thing that, you see how these work. But if we go to the 5 minutes, look at this. This is what we like to see. Look at this. Here is where the lower band, I'm going to expand this so we look at better. And the 5 minutes, here's our entry. Not when we are outside the band. The entry is right when we touch the band and we start moving away from the band, meaning we're doing a reversal. We're moving away back to the mean. The mean should be this 20 daily SMA, or for me, it's the BWAP because I use the volume 2. So any of those, it's going to be right in the middle. And, if we grab calls here, look at how it visually simple. You know that when we are getting very close to here, you should be out. That's it. And then if you wanted to enter here, puts, not as good of a trade because we don't have the volatility that we had right here. So we had a squeeze, a volatility, and then we're squeezing again. And look at, if you grab calls here, look at this move. Here's where it gets tricky. Normally you will grab a call here and get out on the touch, but here's when we were walking along the upper band all the way up until the end of the day that we were completely overbought. Look at how we went out completely. This is an amazing trade, but here it gets a little tricky. Should I need to get out here or would have waited all the way here? So here's where you try to help yourself, like, well, I'm still on my MACD, I'm still a little bit away from it. So let me see if I find a little more of a visual cue here. And it's telling me that I gotta be careful here, but we're bouncing up again. And I still have space to no, we never went completely down. So just a little red candle and again, up. But either way, if we just grabbed here, calls all the way until here, that's this is like a freaking 3-hour trade all the way. So this is from, what is 12:35 all the way to 2:45. So yeah, 2-hour trade. Nicely. So
yeah, I
let's
traded
see.
that name last week. I am looking to enter on some 170 calls when it pulls back a bit. I'm looking at the 9/6/24s, the 170s. I don't know.
Well, we have to see now. Look, to know what's going to happen tomorrow, I need to know. We are squeezing right now on the pre-market, on the aftermarket. I need to see how this is going to open tomorrow, compare with my levels that I have on the different, like if I go to the 4-hour, on the 4-hour, look, if you wanted to grab a swing trade, you would have grabbed calls here and let them run all the way here. And look, here's where we're touching now the B band. Here's where you might be having to be careful on selling, but I need to know what's going to happen on the pre-market to see if we're going to hold upside here and try to go back up to the upper band, or if we're going to go lower, and if we might have a reversal. Because you see that we have here on I have a little move here on the on my MACD, but if I go to my this is my TTM squeeze, you see that we were down here, and then all of a sudden I got the change here of trend up, and now we're losing a volume on the aftermarket a little. So I need to see what's going to happen tomorrow with my other indicators, not only on those. So normally this is how I have my setup. So I have the B bands here on the lower time frame with my MACD, and I am using TTM squeeze with a with just my daily SMAs. So that's why I had opened only this side, and that's what we're watching right now. I got ARM. So here's where we have ARM right now, Gail. You see, ARM was on the 4 hours, we're trending up and doing nicely here. But if we switch to the 5 minutes, what happened today? Well, we were squeezing on the aftermarket, pre-market squeezing, and then all of a sudden we have our volatility open. So it went up, sort of touched there. You could have grabbed puts there if you wanted. And then here's where it gets tricky again. We were completely oversold all the way until here. So you would have grabbed puts here and get out. But if you wanted to wait and be a little more patient, and we see this more in detail, you could have just wait until this candle. And here's where it gets, we were at the top of the MACD, and then we plateaued there. So when you lose, you see this volume is increasing. And then here, when you see that we're holding, here's where we start to see this hold. And here's where the move really start to go up. So if you see this peak here, look at how this correlates here with this candle here. And here's where we start pushing up to get out around this area. And then we're squeezing again. So I try to avoid when this is squeezing. And then what you want to cut is what's going to happen on the next open. When it's going to open that volatility again, we want to see the squeeze open it up to see how far can I go from one price action to the other one. You wrote the puts but missed the calls. Yeah, you see, this was a very nice trade, but really a little bit harder to cut. The only situation or indication to hold those puts is that we never broke VWAP on the way up. And probably if I have the daily SMA here, probably it's the same. Let me add it here so you can see it, guys. As simple moving average. I'm going to add it. I'm going to change it here to 20, and I'm going to make it, let's see, what color can we make it to make it different? Let's make it blue, yellow. So here's where the SMA is, you see? SMA is a little bit more in the middle of the two, and the VWAP moves a little bit more where the volume. So we have higher volume, the VWAP is going to move a little bit more that way. And if we don't have enough volume, look at how the VWAP here is upside, but the 20 daily, this is the standard setup of the Bolinger band. It's right in the middle. So you could have traded from here all the way down, from here until here, from the middle band all the way up and down. So you don't need to use the VWAP like I'm doing. You can just leave the standard and it's going to give you beautiful entries. And as long as you're not crossing the daily SMA, you can keep holding. Then here is like, well, okay, this is a reverse, I'm out. But normally from one trade to the other one. So this is how I like to use it. And let me see what other name that we play today. Oh, NVIDIA. Look at NVIDIA today. Look at this move on NVIDIA today. So NVIDIA was a little bit of a different monster today. Why? Well, if you see, I'm going to go to on the 30 minutes. This is what I have on NVIDIA. Look, I have NVIDIA on a trend, and we went down on the trend. Look at where the VWAP is. We went up on the trend. Look at where the VWAP is. We went down on the trend. Look at where the touch of the price action is, and look at where we went down again, and look at where the VWAP is. So you see if you are in a trend, how this correlates a little, and then look at the entry here, entry on the lower section, and then look at when we went all the way up, but when we touched, we were walking along that B1 all the way until the end of the day at 130. But what I want to show here is, you see how these, you cannot use just the B1 by itself, but I'm keeping an eye on my trend line. So I'm very aware of where is my price action, and this is an incredible entry that the B1s are telling me. And even though I got out, my B1s are still telling me you still have a little more space, so you might be out here, but you're safer is this one. You're out here. But I have my fixed price levels telling me, Empanada, if we're going close this price action, you need to trim or be careful. And it's perfectly what my indicators on the price action is telling me, because I could have just go here and go to the 5 minutes and then do something like this and do like this and wait to see if I have a little more of a break of the trend line and go up. But if I grab it here from here, it's not that I don't care, but not my risk reward for the end of the day on these 10 minutes. I'm not gonna do it. That's where we go to SPX to play around if we're green. If we are not green, we're done for the day. So we have this is a team, somebody asking on the chat. You see, if we have on the 30 minutes, we have here, we never went, like, you see how the price action is not very volatile until here. Here goes very high, and then we just keep going, trending higher. I'm gonna take off this, remove the VWAP. So I'm taking the VWAP for distraction. Look at how this goes in the middle, and we never touch it. So it's sort of a reassurance that we keep, this just keep going up until this price action. We don't know what's gonna happen tomorrow, so we need to wait. Beautiful, beautiful thing. SPY on the 5 minutes. Look at how SPY played out today on the third. If we were playing the 30 minutes on a bigger time frame, look at what the chart tells me. Break up here out of the middle of my 20 daily SMA and just up until here. This is the first time where I need to get out because it's the first time that I'm oversold. I mean, besides this one. But then I know that, okay, I gotta be careful here because this is a rejection. We rejected, like retested and went up. So there's different ways that there's no one magic way to see that you are just watching and it's gonna work. You gotta be careful. You gotta be very aware of all, like your price action, your dynamic levels and moves.
Yo, I have a question. How about if, like, you want to play like if you don't want to play Friday, like same day contracts. Let's say you want to play Friday expirations. What are your thoughts on like queues? Like, for example, the 485 or even the 490 calls, and for the SPY, 565, 563 more in the money, and then the bear scenario, obviously a little bit price target to the downside. What's your thoughts on that?
On the cues, right?
Yeah.
Well, look at the cues here. We got different problems with the cues. First, look at this trend line. Look at this. This has been amazing. So if we go to the 4 hours, look at, we went up here, went all the way back to our support. Again, you see how the levels keep repeating itself. We got support at 420.63. We got another support again at 430.22. We're supporting, and then all of a sudden we have this huge move up. If we go to the 4 hours, look at my Bollinger Bands telling me, get in here,
Is it?
get out
I
here.
think there was one of the classes that you were doing about like every time the trend would bounce. I think it was one of those classes that you were demonstrating. Uh, so I was saying like right here, the cues are like every time they consolidate a bit, bounce, and then
Yeah.
consolidate, bounce. It's like a ladder, pretty much. That's what I'm looking at.
Yeah, this is called a step in sort of a diagram or a chart because it always, all the price action every time it goes up or down and then consolidates always. And that's why you see this move like kind of straight and then it's a break up or down, then a trend line up or down, a trend up or down. It's a range, a range, a range, a range. Just look at this. This is stepping, one step, second step, third step. Now we're going to see if we keep on going up. And the assumption is that if we have a great rates coming up, and if we have good FOMC minutes, and we have Powell talking on Jackson Hole on Friday, we might just keep, moving a little until these levels over here. So,
Yeah,
but
those levels on the cues that when I entered when I entered puts was back first I started seeing the I had my Bollinger Bands and my pretty much all my indicators. And first I saw that once it hit 494, it got rejected, but fast, and then we saw 484, and that's when I took a put, and it was pretty much kind of like a swing put, like 2 weeks out. So it worked out really nice, but like that's the pretty much the key level where it broke trend on the 484.5.
yeah, well, if you see, normally what I do to know that when it breaks a trend, I will go somewhere like this, something like this, then something like this, and I'll go like this, 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 this. So I see how I visually go to know like up, up, up. We got a little look below, kind of retrace back, and here's when we're breaking up. Here's why we have this move. And if you see look at the Bollinger Band, look at what the Bollinger Band told me. Get in here, get inside. Even if you were grabbing calls or grabbing shares, this is your entry, this is your exit, this is your entry. And after this entry, up, 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 up. I've never touched back my 20 daily SMA, all the way up on the 4 hours. Now let's see what happened today. Today on the Qs, this is what it's telling me, that if I go oversold, so this is the type of moves that we have to be careful with. This is a fake out, because why? Well, we went up, but it was a nice scalp all the way until the 20 daily. It never went all the way up. So I don't have the volatility that I'm looking for a full trade, because the full trade will be on top of this band.
That's the trade I kind of took, like right when it hit the other candle, kind of like the fat red one and then the green one. I entered 477 calls on the Qs for today, and then I sold them at that top arrow
Here, here,
a little bit
here.
more up. Yeah, right there. That's when I sold most of my position, and then we're talking, and then we got that nasty fat candle, red candle, and then I think you got stopped out, and then that's when I got out.
This is where I was talking with Grizzly.
And I got faked out, but it was a good trade. But
Grizzly told me, like, what do you want to grab? I said, like, I want to be in QQQ calls. And we got here, and then we got the kill candle. And then I thought that this move was going to do this. It didn't. It went down, kill candle, never went all the way down. It kept on the price action in the middle band, and then it went up, and that's where we have the move. So it's funny, because this is one of the things that you need to be a little bit like, persistent. Like if you see that this thing went down here, but it went up, and you still think that the move is going to happen, you just go back
buyers fucking smoked those shorts so fast right there in that candle. That shit was.
Yeah, I got back in on my Qs here.
I know. I saw. It was a good trade.
And
imagine paying NQ calls.
Yeah, well,
20,000. The 20,000 call.
Hey, I was on SPX calls, and I sold my SPX call for like 250% all the way, because SPX did kind of the same here. Look.
What's that fat green candle at the end? Was that AMD buying that one company for liquid?
Yeah, for AI. It was they're gonna move their participation in AI, so they bought a company to do that. But look at SPX here. Here was a buy, and then all of a sudden, all the way up until like these two candles here was a perfect end of today for SPX.
I think that's the hardest part, right? Like playing like the huge leverage like SPX or NQ or like whatever like big indice, and then like I mean you can make quick profit like on a candle or whatever, but I mean,
But
if
you can
it's a
lose,
trend day, you get
but
paid.
you can lose everything on a candle like this. So this is just if you are green on the day and you're making your date's doing great, you try to play one of these trades with a percentage of your trades of your gains. But if you try to make your money all the way only with SPX, it's not that it's impossible, but it's really hard. And the risk it's enormous. I know traders that they only trade SPX. That's the only thing that they trade the whole day, and they make hell of a money. But then sometimes when you see their losses are like 10K, 15K, 25K per day. So they need to make that money up and more to be positive. So it depends. It depends. So
I think Anthony used to trade SPX, right?
sorry? Who?
Anthony used to trade SPX.
Yeah. We traded, but we traded with small positions and not huge contracts. But I had traded at SPX, and there are some big trade. There are other people that they don't share their gains and stuff. That they trade very nicely here, and they make a lot of money. But there was a time that we stopped sharing too much of the gains because sometimes it was a little bit not overwhelming, but it was problematic because people did not feel good that maybe you were making $300 and there are some people making $25,000 a day.
Oh yeah, I mean, it just takes a big like process, you know. Like if you're starting a port with $1,000, you want to grow it to 10K. It's gonna take you at least 3-4 months, like of good consistency. You know, you might get some good or plays or whatever, but like it takes time, you know. And then the other person is playing with 3 million and he makes 70,000 in a trade, like you know.
Yeah, that's a difference. Like, if I have $100,000 account, which is not that big nowadays, I can trade SPX with $25,000 in one trade. And if it moves like half of a candle, I already made a lot of money. But if you have
Yo,
a
can you check two more tickers if you can? It's Roku and then that Solar Edge. I was looking at some volume today. It
This
was
is
pretty heavy.
Roku.
Yeah.
You see how it has gaps. I don't love Roku nowadays to trade. It has a nice move here, but let me see on the bigger. It's been trending up right now. It's grabbing all up to these levels here, you see. So the entry was at what, 48.3, and I like it better for shares, or maybe like days like today, just maybe quick scalp, even though it's a good trade, but look at the volume, like 400.
I think Hims too is like an underdog. Like out of nowhere, you're just gonna see it go to 30.
What was the other name?
It was Solar Edge, SDEG, and then Hims.
SPEG, like this.
Uh, shit. um, SEDG. Yeah. Yeah, it's that one, bro. That one too. I've been because I like to look at volume and like sometimes they're pumping dumps or whatever, but that space mobile fueling one, ASTS, has been, I mean, usually pumping dumps happen like they hold it for 2-3 days and then they get rid of it, but this one's been staying up consistent. So, and it's like at the 35 or like it got a big ass like jump, you know. It got a big ass jump from like $3. I think last time I saw that stock, it was like $3. In a month or two, like went up to 40. I'm like, what the? How the fuck did I miss this? You know. But I mean, there are stocks that's what the stock market is. You know, stocks go up and down. I think Joe mentioned one too. I forgot the ticker. Freaking it was a robotics company. I think they bought it out or something, but same thing, $3 to I think 18, $19. I forgot the ticker, but it's something similar. You know, it's like we do see pump and dumps, but like when we see what catches my eye is that when they hold off like that, and then they accumulate more, and then I mean that's when you see a kind of growth value stock that keeps on going up during the time, but who knows?
All right, I'm back. Am I? Yes, I don't know, for some reason, my Discord got in the middle of my Zoom, and it kind of muted the microphone automatically. Sorry about that. I was saying that PayPal looks amazing. PayPal, it's been on a move up, consolidation up, consolidation up. So I believe that it will be at 70 tomorrow if this keeps going like that, and we have good data or whatever is going to happen. This looks amazing. Sorry about that. I was just watching how it went off from the 1 hour. I was looking at the move, and I grabbed some more time. So I wanted to see like what was PayPal doing, and then I have this trend line that it comes from the daily. So I had this trend line here, you see, and we broke down, and then we are inside the trend line again. And then I want to see if we go again to probably the top of this trend, somewhere around here, somewhere on around this area here. So, but if we got to watch 70.96 and then 76.39. And then if I go to the 5 minutes, this looks great to keep going up, up, up. And I can arrange a little bit these levels here because I can see that, this is telling me to go over here, and then I have an intro level probably over here. I will see tomorrow if we are above today.
Recording in progress.
If we are above today's,
We are above today's
that will be great.
That will be great.
We got some, okay. 73, 74, very, very good volume bone. Yeah, I think that you won't have any trouble with that. Yeah, looks pretty nice. Looks very nice, very nice. The volume, it's 9 million on the way up with a 9,500,000. So it's all, everything, it's a buy from here. The entry was around this area. I mean, this was the ideal, but here's when we're getting back into that huge trend. Nice one as usual, viral. Very large OI on the and 20. $13,000. Yeah. Beautiful. Always on point in those trade. I hope that you grab it here, my friend. I hope that you grab it here. You should be like 132% up already. IGV. Beautiful hold here. And then if you go to the B bands, a little bit of lag there on that gap. And then if we go to the 5 minutes, let me grab a little more of this space here, and not a lot of volatility. The volatility happened here, but you see it's not move that much. It's on an upper trend with a beautiful close, but it's not giving us too much of a range to trade daily. Like it's better of like a hold on the day, but today, like from here, from 85 to 86, that's not much of a move, but it's a great longer. It seems that we were kind of consolidating here, and we're starting to do a move here. So keep an eye on this for tomorrow to see if we have more volatility. I'm trying to play tomorrow, but holds to holding on Palo Alto. Pawn. This was a move, not much. I thought what I have. I thought the thing was going to move higher or anything like that, like the before, but not much, not doing much. Let's see if even tomorrow we might open, unless we have a huge move on the pre-market, we might open again around this price action here. If we are below this price, we haven't done much. All right, guys. Thank you very much for your company. Thank you very much for your questions. And if you have any doubts or any more use of how to use the Bolinger bands, please let me know. Thank you for your time. Thank you for the company.
Thank you for your time, Empanada.
It's always a pleasure,
Thank
guys.
you, Empanada.
Always a pleasure. Always a
Thank you, Empanada. You have a lovely rest of your day, bro.
You too, guys. It was great talking about something new. So have a great night and see you tomorrow, guys. Good luck.